So it looks like the leak was true. 75 basis points took place. The Federal Reserve rose it most since 1994. One of the big things to pay attention to here is the interest rate projection is actually at 3.4%. That was a pretty big move, actually. It was a big upgrade from 1.9 and 2.8 that they penciled in for their March projections. Now, this is year-end stuff here, so what does that actually mean? Well, Danielle DiMartino Booth posted this. The year-end policy rate is 175 basis points more in tightening. We have 4 more meetings left, so go ahead and divide that to how many, rate increases will be over the next 4 meetings. Is it going to be 75? 75, 50, 50, is that what it's going to be? And then there's going to be a pause. Are they going to get to 175 basis points more? You got to ask yourself, is he going full Volcker or is he going to, back off? Well, we're going to have to pay very close attention to the inflation data that comes out. Here's Jerome Powell right now talking about his 75 basis point hike or a 50 point basis hike may be likely in the next meeting in July.
Clearly, today's 75 basis point increase is an unusually large one, and I do not expect moves of this size to be common. From the perspective of today, either a 50 basis point or a 75 basis point increase seems most likely at our next meeting. We will, however, make our decisions meeting by meeting, and will continue to communicate our thinking as clearly as we can.
I'll tell you one thing, the market is getting complicated. So if you have a relationship with this stock market, head over to Facebook and make sure to update that relationship status to it's complicated. Let's take a look at the yields. Really, I want to pay attention here to the 10-year and 3-month curve. You can see here it is heading towards the inversion, but we're still well off. Report 1.59 today, which is definitely getting flatter than it was prior. So we'll see if this trend continues down. This is a Fed staple here, so we need to pay close attention. The other yields backed off slightly, but as you can see, this curve here is flattening while this one steepened slightly. That one is the 10 and 2. Now these positive divergences that we talked about between HYG, right, up top, and then SPY, which is down below, did play out to the upside. We got that pop in the SPY. HYG also moved up, so we'll see if there's a continuation of this bear market bounce. This is, by all means, a bear market bounce because we are in a strong downtrend. That does not mean that we can just all of a sudden, right, call this, a new change in trend because we had one move to the upside. We can have multiple moves to the upside, but that still doesn't change the fact that we have lower highs and lower lows building. This is why I said get tactical from a long perspective and why you shouldn't short outside of these ranges. And we talked about all these divergences and so forth. Now, I want you to pay attention to where we stand within the 5-day moving average. Look where price came to. It almost tagged it, it didn't quite. So there'll probably be a tag here in the near future, but understand that it is still declining. So if you haven't got into a long position, I can understand why, because, well, we're in a bearish context based off of this 5-day declining moving average. If we take a look at the VIX did fall off, right? We talked about that negative divergence there. Boom, we came down. And just like we actually said, right? We talked about back testing this trend line. We'll see here if we're going to fill this gap beneath us come tomorrow if we do get some sort of a bounce. So that's something that we want to pay attention to. Take a look at the BP SPX chart. This is another reason why I'm still not, this is, to me, is not a great area to short, right? I mean, breakdowns do occur in overextended territory, but this is just not where I'd want to place my own short. 18.8, right, on the BP bullish percent index chart. The RSI is below 30 now, so it is technically still in that oversold condition. So we'll see if this starts working itself off here in the near future. So one thing that I like to wait for and check is to see if we have positive divergences build. That last bear market rally, the big strong one in March, this one right here, you can see that it actually came on a positive divergence. You had a higher low on the RSI, but then the chart was putting in a lower low there, and that indicated, hey, the move to the downside could be weakening, and sure enough, we had a huge rally come from that. Now, we also have some very overextended areas based off of the percent of stocks above the 50-day moving average and the 200-day. We talked about that yesterday. I'm not going to get into too much detail. It moved up slightly today to 6%, but just understand these are still really, really beaten down levels. Interestingly enough, too, I want to point out energy. Energy's been taking a back seat here, but I want to show the BP chart of energy. It is getting into that overextended to the downside reading here based off of the BP chart, right? This BP chart's a little wonky because there's obviously less equities within it, but it's still something to note. If we actually take a look at the energy chart, it is outside of its weekly expected move, and you can see it held the 50-day moving average. It's done this in the past, and I will say that it is still in a bullish uptrend at this particular point in time. So if you are shorting right here at the 50-day that's increasing after already seeing a pretty strong move to the downside, which could be just a retracement, digesting some, obviously a move to the upside, not the greatest area. Can you get lucky and can it break? Obviously, yes, but what you want to see is a break, maybe a back test when the 20 gets, starts heading down and declining more. But as it stands right now, this is just a consolidation at this particular point in time. So we need to give this more time. Now, from a long perspective, you might say, okay, well, I'm going to just take my shot. I'll buy in right here at the 50-day. I'll have a stop below the low of this candle or maybe a little bit lower, and then see if it comes into the weekly risk range by the week's end, right? We have 2 more trading days left. See if we get a pop to the upside, and there you go. There's a good little trade right there. As long as you're managing your risk, that is, right? The risk from, 82 down to the low of this candle, which was, 80, basically 81, so keep it under 80.99. And then there you go, right? It'd be a small risk for a potential nice pop back into the risk range. Now, let's take a look at the Dow Jones. Dow Jones Industrial Average is putting in on the 15-minute time frame, well below the 5-day moving average that is declining, but a potential inverse head and shoulder pattern right here. So if we start getting above 310, that might give us a little bit more of a rip where we can come fill the gap here that started at the beginning of the week. And if you take a look at the BP chart for the Dow Jones, you can see here that we are moving into that overextended territory as well. We're getting a 29.36 reading. Interesting stuff. Let's take a look at the Qs. The Qs tagged the 5-day declining moving average with just precision, and you can see that it did start backing off after that point, okay? And that makes sense to me, right? We've seen that countless times where it holds as support, but then also can act as a level of resistance. We need to be patient here, right? This can come right back down, can doodle around. We can see this flatten out. If you are bullish, and you did not take a bullish trade, don't feel bad about that if you didn't catch this move, right? Because first off, it's the Fed meeting, right? So there's a lot of volatility. It seems like they're very serious about quantitative tightening. There's all these narratives, but just be mindful when you just take a look at a chart, 5-day moving average is still declining. We need to get neutral, and then we need to get bullish. And we're just not there yet. Could be soon. So we'll continue to monitor that. The BP NDX chart is still not in oversold territory, which means to me that it could potentially head lower, but it is getting rather beaten down. That's for sure. It's at 13 right now, which means 13% of the stocks are on buy signals. So it's a very low amount in the NASDAQ 100. So, this is not necessarily an area where I'd want to short either. Now let's continue on to the Qs. The Qs tagged right back into that and then just doodled around all day to the lower risk range for the week. Did not come that close to the 5-day moving average that is still declining. So that is something that we're going to continue to pay attention to, right? We'll see here if it can fill the gap this week. That'd be a pretty large and hefty move. As it stands right now, we are just sitting on the lower weekly expected move. Let's take a look at oil, right? So we talked about energy. Well, oil's taking a pretty big backseat too. We talked about yesterday, this bearish crossover is taking place, and this outside trading candle might lead to more weakness. Sure enough, we had minus a 3.4%. So if you are getting bearish here, understand it's totally fine. Where would you potentially take the trade to after seeing some, move to the downside? Hey, maybe you have a stop above here and you're playing it to this lower trend line, which is around 105. Okay, that would make, somewhat sense, right? You have your risk here and then your reward here. It's, a little bit greater than a 1-for-1, but just be mindful that the overall trend still remains at this time in bullish context. So even a pull back down to 105, be careful because this thing could still obviously turn back up. As it stands right now, we're back below that 20-day moving average, and it signals that it could potentially head lower. But let the market digest what just took place currently at the with this rate hike. Take a look at the dollar. The dollar outside trading candle had a higher high and a lower low versus the prior day. You can see we backed off a little bit, and guess what? Look at the candle for the S&P 500. It looks darn near the same. So if the dollar can start backing off a little bit, like we discussed, perhaps that brings the S&P 500 up a little bit, and then we could start looking for new areas to put shorts on. Only because I say that is because it is still lower highs and lower lows. If this is a bottom and you start putting on longs, cool, but there's still a lot of work that needs to be done in this environment to actually be, to call this a bottom because it's just not there yet, unfortunately. Let's hop into Bitcoin really quick. The Saylor to Schiff ratio is below the 0 marker since early April. The price since that sell signal is down, 50%-ish, right? We hit 20,000 and started kind of finding itself a little bit of a bounce here. This does look like it has the ability to bounce a little bit more. Why do I say that? We had a large bottoming tail today. You can see that right here on the zoom in figure. And you could see that, it was a big move to the downside. It had some pretty big volume, but the buyers really stepped in at 20,000, pushing that candle all the way back up, which could indicate that we could see a little bit of a bounce. Does that mean we're in bullish territory all of a sudden because we get a couple of days of a bounce? Absolutely not. This thing has been getting completely hammered. So if you are tactical and you want to play from the long perspective, I can understand that, but just be careful. The trend still remains down and just heavily beaten down. That's for certain. If you take a look at Ethereum too as well, we broke down from this descending triangle that we pointed out and never got back above there for that pop. Just broke down and it fell just hard and fast like a rock. Now we're still forming somewhat of a bottoming tail here too. This is quite large, so maybe we pull down a little bit lower and then form another one, and then we start getting above 1250 to get a bounce. Anything is possible right now. At this particular point in time, just know that the buyers did step in at these lower levels for both Ethereum and Bitcoin, but just because we have, 1 good, 2 good, 3 good trading days, that does not change this trend, which is clearly down at this particular point in time. All right, everybody, that is all I got for you on today's episode. Let's recap. The big thing to pay attention to is that we're still in an oversold condition. That does not mean that the market can't fall from here, right? We have these OPEX coming up, so we need to be mindful of that. We're in bearish context in the short term, so we need to be mindful for that. We're right around the lower expected move for the week on the SPY. We're outside of it for energy, and energy has been getting beaten down. It's a time to be cautious. It's a time to be careful. If you don't know how to tactically trade in this environment, obviously, just back off and watch the market digest this news, and we'll see if anything sets up going into the next week. Have a good day, everybody.